like I was saying, it's FTX. It's a safe and easy way to get into crypto.
I don't think so. And I'm never wrong about this stuff. Never.
Like you play a game of League of Legends while trying to raise $285 million.
Was also involved in a very similar scam back in 2010.
Sam Bankman fraud.
And just like, what the heck is going on?
Yeah. Welcome everybody to the emergency pod. So today we're going to speak about FTX and the whole shindig that happened behind it, or the behind the stories. We have researched, we've been following it all throughout. What's up? Are you excited?
Yeah, dude, like it's unbelievable that something like this is going on. We were not supposed to talk about crypto for a while, but then here we are because it's just of such significance to everybody, right? As in like institutional investors, retail investors, and like general public. This just calls out a lot of things. I just think it's important that we talk about this and share what we know with people.
Yeah, absolutely. So I think we should we'll just get to it. So I want to start off by speaking about SBF, who is Sam Bankman Fried.
I like how you were about to go for fraud, but then, and then
Yeah.
right.
Sam Bankman fraud. Okay. Right. Because the reason why this is such a massive deal is because he was known as like the white king of crypto. He's the savior. He was the chosen one. And just everyone, he's caught and he's maybe on the run. Who knows? Who knows where he is, what he is doing right now?
Yeah, no one except Larry David saw this coming.
Yeah, I love that Larry David clip. We're gonna play it at the start of this. It's amazing. Larry David for the win. Larry David for the win. Okay, so I'll just deep dive. Let's jump in straight. I want to speak about SBF himself and how he became the white knight of crypto. So he became a billionaire at the age of 29, almost $16 billion was his net worth, and that was all in just 4 years. 4 years of a time. So, the wonder kid, as they all called him, the fro of crypto. Okay, and oh, by the way, I have the look.
SBF.
I didn't cut my hair just for this. Just for the SBF tribute. It's the last time we can do this. Okay. Yeah. Okay, so moving on. Okay. So in his early childhood, his parents brought him up in I can't say this word, man. You can't say this word. So let me just tell it clearly. It's the theory of morality. So basically it means do action that cause happiness. Don't do anything that causes unhappiness. So he believed in this throughout as he was getting richer, and he just kept saying, I want to give back to society. I want to help others. I don't want to be greedy. So even when he was a billionaire, he didn't own the fancy Lambos and everything like that. He just rolled on a Toyota Corolla and those kind of things.
Oh yeah, no fancy cars.
No fancy cars apparently, but although he lived in Bahamas, but that's a separate reason.
Probably like fancy private jets and fancy private yachts. That's where all the money.
No, none of that actually. None of that. So he bought a house in the Bahamas where all the boys in his company just worked over there pretty much most of the time, and because look, man, he was actually a crypto leader. Okay, he was helping with he was donating for a bunch of campaigns. We'll talk about this later. He was leading. He was working with these legislators and the rule makers in America and all these things. And we have a lot to thank to SBF about. He's done quite a bit. So, okay, getting back to it, he went to MIT. Okay, he started working in a trading firm for 3 years. Quit. that, and then he found out about crypto. Okay, and this is how he made his first couple $1 million, and this is how he gained recognition. He identified that there was an inefficiency in the crypto market, and this is during the 2017 boom when Bitcoin was at $20,000, and it all exploded, went down to 8 or 4K or something like that in Jan 2018. Okay, so what he figured out, this inefficiency is called arbitrage. And just to explain what arbitrage is, it's the same goods or services that is sold at the same time but at different price points. Okay, same product sold at the same time in different places at different prices. So he noticed that in Japan, I don't know, I'm just going to throw random numbers, but this is what happened. In Japan, Bitcoin was 10% higher. So Bitcoin was at $11,000 versus Bitcoin in the US costed just $10,000. So he had to do the whole thing. He had to buy low, sell high, basically.
So he would buy from US at $10,000 and sell it in Japan for or the other way around, basically. He'd buy it in US for 11K and he would sell it in Japan for 10K, and then he would keep the 1K.
Yeah. I mean, that's what the arbitrage is. But yeah, Japan had the premium. So most of the Asian countries had the premium because crypto was still not completely accepted by this. There's actually something fascinating. More than Japan, it was actually Korea that had the crazy arbitrage of over 30% on average. Okay, sometimes it was even higher. And it was called, okay, fun fact, it was called the kimchi premium. Okay, so
Kimchi
essentially
is
what
dish, right? It's that cabbage.
Fermented cabbage.
Yeah, okay.
Yeah, with gochujang for my Korean listeners. Okay, yeah. So he would essentially buy the Bitcoin in US. He would sell. He had to transfer the money, the Bitcoin, and sell it in Korea or in Japan for the higher premium. So he'll make that extra 10%, and he would encash it in the Japanese yen. So, and then he would have to transfer the Japanese yen back to United States. Okay, so he used to max out the amount of money that can be transferred, which is $25 million. So he just kept doing this, and he was making $1 million a day while doing this. Okay.
Dude, how is this even regulated? Is this even allowed? Do you know that?
Yeah, so no, arbitrage is very common. It happens a lot with your currency, your basic currency market, commodities also it happens as well. So arbitrage is a very, very common thing. It's just that this high amounts of money was unheard of, okay? Because the thing is he had to get the money back into the US within the 24-hour period. Okay, otherwise that whole the prices would get updated and the whole thing would nullify. Okay, so the story is if you go to any bank, and this is back in 2017, right? You have $25 million of Korean money or Japanese yen, and you tell the bank, hey, yeah, I need this money transferred to the US, and that is the definition of money laundering. Every single banker would think you're money laundering. So, which is where the Alameda Research was formed. Okay, so which is the hedge fund, or as they called it, International Crypto Liquidity Company. Okay, so Alameda Research, they had an office in LA, they had an office in Hong Kong. Okay, and they called it research because everyone's like, oh, it's just a research company. They need the funds, and it's more accepted to people. Okay, so he just did it under the...
Even the name Alameda is it doesn't strike to you as anything to do, that name has anything to do with crypto. It's probably some kind of something like Byju's or something,
Yeah. Yeah, I don't even... Byju's is at least that guy's name. So that didn't make sense to me, okay? Nobody knows what a Byju is. At least Alameda is the name of the city. Yeah, what is Byju? But anyway, now Byju is worldwide known because Messi.
Yeah.
Hashtag Messi.
Oh, okay, that's a different topic altogether. Right?
we're digressing. Okay, so this yeah, so he did all this. Okay, he needed it to sound legit, and it was very legit. I made a research. So this is how he made his first $20 million. Okay, and come 2019, that's when he started the crypto exchange. Okay, and listen to this. By 2019, there were a lot of crypto exchanges out there. Okay, centralized, decentralized exchanges, they were all there. And and I quote, and I just want to quote because this is a very, very important quote. He says, all the crypto exchanges have shit the bed. Over hundreds of millions of dollars have been lost. I need to change that.
He said that?
And that's where FTX, yeah, he said that. He said that. Okay. It's a direct quote. Okay. So, yeah. And then he started FTX. He gained the trust of people, built by traders for traders, the whole shindig. Okay. He got the big, massive sponsors, the ambassadors, Tom Brady, Kevin O'Leary. The MLB umpires were FTX. Okay, he went full Baiju on this. He literally went full Baiju on this. Okay, yeah. Actually, even further. So they even got the rights to Miami Heat's arena's naming rights.
Dude, that's
Massive. Even
massive.
The current World Cup.
That's actually so intense. But even Crypto.com has their own stadium, like the Staples Center, that is the Lakers' home court, is now being called as the Crypto.com Center or whatever. So yeah, it's just one of those things that's just happening. You have to deal with it.
So Crypto.com had Matt Damon in their advertisement during the Super Bowl, and it was like super cringe and those kind of things. So they got like shut down with the whole going big. Okay, so yeah, coming back. Okay, very interesting thing happened. Okay, around this. Okay, so FTX has started. People are trusting it. He's getting all the sponsors, this ambassadors, and those kind of things. Binance was also an investor into the company. Okay, and Binance at this point was number one in the world. It still is number one in the world. Okay, they had massive liquidity throughout the world and throughout all the exchanges. They are the liquidity providers. So it was great. Okay, they were helping each other out, and this was a very good marriage. That's what they called it in most of these articles that I have read. So CZ and SBF were like friends. Okay, Binance owned a big share as well. A couple years down the line, okay, SBF was like, hey, he wants to get his ownership back. Okay, obviously, I we all know, competitors, you can't be you can't compete in the same market. You can't be one or two and the number one owns you. I guess that's what was going through SBF's mind. So what he did was, he told CZ, who is the co-founder CEO of Binance, that I'll buy back my the share that you own of FTX, but instead of giving you money, I'll give you these FTT tokens, okay, that they have created. So that exchange happened. So CZ owned almost $2 billion worth of FTT tokens, and I think this is where the so-called demise started happening. Like if this move didn't happen, then I don't think we would be here today discussing SBF, right?
Maybe. Dude, so did CZ own the FTT tokens, or was it Binance that owned those tokens?
I think Binance was the investor. So Binance as a company invested into the FTX, and they invested cash. It's only when FTX said, look, we want to buy you out, they gave the tokens instead to Binance. Okay, yeah, but majority of the control is still by CZ. So CZ can actually make that decision. So which is why we refer to CZ a lot, because it's it's actually his tweet and everything that, like, I think that's where the so-called drama
And for those who don't
has
know,
started and
CZ
all.
is the CEO of Binance, right? And Binance is a exchange, is a crypto exchange, just like how FTX is, right? So an analogy to this is just like how Zerodha and Grow and all of these exchanges are there in the regular stock market. We have these kind of players in the crypto, that is Binance, FTT, CoinSwitch,
Coinbase.
Coinbase, WazirX. All of these guys are centralized exchanges that are out there.
So, I have a question for you. Did you ever invest in crypto? What's like anything?
Yeah,
Do you have an account?
yeah. I have an account in CoinSwitch Kuber. It's an Indian-based exchange, and luckily they don't have their own tokens. Although I think that I'm sure some Alameda is such a huge market mover that I think that there is some affiliation tied to CoinSwitch Kuber as well. And by the way, a market mover. Do you know what a market mover is? Yes.
Uh, yeah, like it's a market maker, right?
Yeah,
Is
market
it
maker. Yeah.
market maker?
Yeah.
Yeah. But explain. Go ahead.
Yeah, so basically, when you buy or sell stocks, right, on a platform like, let's say, FTT, you would not really own a particular token or a coin immediately. Like, you'd see the transaction go right away, but then it will take some time for the transaction to actually process. So maybe in your account, let's say you're buying 1 ETH, the 1 ETH will immediately reflect on the app, but for the actual transaction to happen and to be logged onto the blockchain will take some time. And all of these multiple such exchanges will be tied to one particular body, and this body is called the market maker, right? So this market maker basically has a huge network of buyers and sellers, and all of these exchanges are tied to that particular body, and then they do all their trades with that body, right? So and my point being that because Alameda Research is such a huge, it's one of the huge market makers, and CoinSwitch is like a very small exchange, I think that there is some kind of an impact that I can expect. But I've basically withdrawn all of my whatever crypto I held in these wallets. I've just pulled it out.
Yeah, I mean, the same. I started actually around 2017 itself. Like, so right before crypto went to $20,000, I think I started when Bitcoin hit around $7,000, $8,000, and I was like hooked. I was like, I was on day and night, just like I didn't know anything about trading, but then I was just making money. So I was like, oh, that's cool. Yeah, and then I
Which
lost a lot
platform
as
did
well.
you
So
use to trade?
straight Binance. I don't know how I found them, but yeah, it was. No, okay, so it was this thing called cex.com or something .io or some bullshit like that. Okay, but so when I traded, I made like a shit ton of money. I was trying to pull my funds, but for some reason I just couldn't redeem the money. So I had to move it to Binance, and then from Binance I had to move it to a Hong Kong-based fake PayPal. Okay, it's literally like does exactly what PayPal does, but it's like PayPal's ripoff. Okay, I don't even know what it's called. It was there for a while, and then it finally came to my account. And just imagine each transaction, like I had to move it, and each time I'm losing 20%, and still I made above more than like 400%, and like that came in my bank account. So I was like super happy.
Damn. Do you still have
Yeah.
any positions? Okay.
No, so yeah, like as an investment, yeah, I did have like some $50 that was left because I spent everything in like 2018. So yeah, it was just there, and now I think I haven't even looked. I think it's like at $1 or something because I made like long-term bets. And I just like forgot about it. I don't know. I wasn't an active investor in crypto for a while, but
And to be fair, like we hardly researched anything. Like even when I invested, I just picked these big, like most renowned cryptos that are out there, like Bitcoin, Ethereum, I also purchased Ripple and Litecoin because they were also like the talk of the town at one point, right? Back in like 18, 19. So I was just like, going with whatever people are telling. So we weren't informed at all, right? So I think
Yeah.
it's okay, like to learn it. Sometimes you just have to take the hit, and then maybe you'll like realize and be more informed.
Yeah, yeah. Funny you brought up Ripple. Small tangent I'll do. 30 seconds. I'll just finish this. I was awake when like the Ripple like first time like it just started booming. It went from 0.08. No, it went from 0.03 to some 3.2 or something in one night. Okay, and I invested at 0.08, and I just kept like buying, selling, buying, selling, buying, selling. So yeah, that was one of the days where I like raked a lot of money. And this was overnight. I'm just waking up everyone in the apartment I was staying in the middle of the night. I was like, dude, Ripple is going up. Come invest, invest. So yeah, it was super fun. So yeah, what's up? Would you like to do the honors of starting the drama?
Okay. Yeah, that it actually requires like a ribbon cutting and all because there's so much that has happened and there is so much that is still going on in this domain that this is an episode and this is like a docu-series in itself.
Okay, so I'll give you a drum roll for that. How's that
Yeah,
sound?
sounds good.
Let's
Let's
go.
go. Okay. Do we need to add a drum roll? We can add a drum roll here.
I added a drum roll. You couldn't hear it? Oh,
Oh, now I do. Okay.
okay. There we go. I'm still figuring out the system, but yeah, cool.
Okay.
Okay, awesome.
So basically, this all. So you've actually set it up very well, but to like kind of encapsulate or summarize what FTX is basically it's a crypto exchange platform. It's a centralized crypto exchange platform wherein people can trade cryptocurrencies, various cryptocurrencies. So this is analogous to like how I mentioned earlier. It's analogous to Zerodha, right? Wherein you can trade various stocks. Here on Zerodha, on FTX, you can do the same thing, right? Now, just like any other company, the FTX also has assets and liabilities, right? And the idea here is that you should be your asset should always be higher than your liabilities or greater than your liabilities because that is when even like so if let us say something tragic happens you will still be able to survive and like keep the company afloat, right? Now on November 2nd what happened was that actually I just want to rewind a few more days before November 2nd.
Sure.
Earlier in the month of October, FTX was the talk of the town, like you said, Yash, right? Like everybody loved it, and like there were a lot of sponsors. They invested in so much of marketing. This Qatar World Cup was one of they were sponsors for Qatar World Cup, ICC G20 World Cup, and all the stadiums. So they were just so famous, so popular. They got all these big guys. And everybody just loved SBF. Like as a human being, they just they just thought him to be a very good. They thought that he's the right captain for the ship, right? And they're just like, yeah, this guy's gonna take us where we want to go. So in October, Sequoia Capital became one of the investors into FTX. And the FTX at that point was valued at $32 billion. And then, they acquired there was some kind of a deal that went through. And there is also a story that I read that this whole, investing into FTX was done in two parts. The first part was like the professional part, and it was done like, very, very diligently. Then there was another part, which basically was called a meme round. Okay. In this meme round, they raised $420 million, and guess from how many investors? 69 investors. This was called the meme round. Okay. So, but anyway, like so, all this.
And they raised 420.
Yeah. Yeah.
Okay. Jeez. Okay.
So they were valued at $32 billion, and this was looking so perfect, right? Like on November 1st, if you asked anybody about FTX, they'll probably be like, yeah, this is all like fine. Like at least most people. There were some haters. People were still telling that this guy SBF is a scam, this that. But then like a lot of people would probably be under the notion that SBF knows what he is doing and FTX is the shiz, right? And if you guys haven't figured it out already, SBF is I think Yash, you already mentioned it, but then SBF is the founder of FTX. So, so then November 2nd was when things started going downhill, and that's when like the whole avalanche started with a CoinDesk report that came out. Now, this CoinDesk report basically said that there were certain assets that this company held, and it also had certain liabilities. Now, this is very natural in any company's balance sheet, but the problem with this specific company was that their assets were significantly lesser than their liabilities, and most of their assets, which was more than 50% of their portfolio, involved holding FTT tokens, which is a native token of FTX platform. Now, I just want to talk about what a token is, right? Like why is this such a big deal, right? So when companies, so let's say there's an entrepreneur or there's a founder, and this founder has an idea or a product that he wants to put it out there. There are a couple of things. He obviously has to raise capital to be able to support the operations that go into like providing that product or service. Now, how does he do that? He goes to an investor, right? Like when he goes to an investor, he borrows money and then he gives out something in terms of collateral, right? So conventionally, and it still happens a lot today, one of the ways in which founders do it is by giving out equity. So by getting in terms with the investor, they decide what is the valuation of a company, and then they'll be like, okay, because you're giving me this fraction of the total valuation, you'll be getting the proportional volume of shares, right? That is one way to raise capital. The other way to raise capital is because of this whole blockchain technology that has come out, we are now in a position to create something called as tokens. Okay, token is nothing but a digital it's a digital asset that any company can have, any individual can have. Even I can have a token, Yash can also have a token. Anybody can just create a token on any blockchain, right? And then we collectively give it a value, right? I will be like, okay, each token is valued at this much, and then people start trading on it. Now, if they are really good tokens, like NFTs are tokens, right? So these are non-fungible tokens. So if they genuinely see value, like for example, Jack Dorsey's first tweet became an NFT, and they're like, oh, this is like one of a kind, and we have to people collectively gave it high.
Assign a value
Yeah.
to it?
Collectively, they gave a very, very high value to it, right? Similarly, there are a lot of these altcoins, meme coins, and these shit coins that keep coming out, and like nobody really values them because they are like pretty much like the value proposition they bring is very small.
Okay, yeah, I have a question. Is this basically what they call an ICO?
Yeah, exactly.
Initial coin offering?
Exactly.
Okay.
So this process is called as an ICO, right? Like how if we have an IPO, like in crypto world, we have an initial coin offering, wherein the founder says that, hey, I have 100,000 tokens, and like you guys come, you give me money, and I'll give you that proportion of tokens. And by owning those tokens, you can do one of two things. You get certain special privileges on my platform, on the blockchain to do certain things, or you can trade with other people, right? You can just hold those coins and then wait for some time for the value to grow, and then you can sell them out for a profit, right? So they can do one of these two things. So this is basically how coins work, and this is why coins exists and tokens exists, right? So FTT was one of the tokens of FTX crypto exchange, right? And by the way, FTX crypto exchange is a centralized organization. It's a company that exists. It's nothing to do with crypto. It's nothing to do with blockchain, decentralization. None of these concepts come into play. This is exactly like Zerodha is, but except that it is doing all the tradings of cryptocurrencies, right? So
And it had a money maker as a
Very conveniently, right?
very convenient.
Yeah.
Yeah.
So
Owned also by the same founder.
yeah.
Yeah. So
So
yeah.
basically, in the balance sheet, they found that they owned more than 50% of their own tokens, right? And they were saying that, hey, this is extremely valuable because this is extremely valuable because like the trading value of this at the start of the year was $50, right? So and this is one of the top tokens that's out there in the crypto market. This used to be at least, right? So this balance sheet was released, and then this drew a lot of attention, right? This primarily because you can't really ascertain a value to something that you hold a lot of it, right? Like what I mean by that is if you have like more than 50% of any tokens that's out, like if you are in possession of so many tokens that you have created, and then you have all the power and ability to pump the prices of that particular token,
Yeah.
right? So you can obviously create you can create this fictional demand for the token, and you can inflate the prices. So, and this is precisely what they used to do as well. They figured out that, hey, we can basically keep increasing our valuation by doing this, by pumping up the token
Yeah, the
value.
mini ICOs that used to have, sorry, the mini ICOs that used to happen on that, what was that, Cupcake app,
Pancake
right?
swap.
Pancake Swap,
Yeah.
sorry. Pancake Swap. I was very close.
Cupcake.
Okay.
Okay.
Yeah. Yeah.
So
Yeah.
this happened, right? Like, and this drew a lot of attention. People just started questioning this a lot because this is just not okay. This is, and the problem is this is not illegal, right? Like there is no, he hasn't committed a sin so far, or he hasn't committed a crime so far. But the point is that this is based on a very weak. The whole company is based on extremely weak fundamentals. The foundation itself is it's not strong, right? And like hypothetically, if the token value went down, then the whole company basically collapses, right? So if your valuation is 10 billion and you hold 5 billion worth of FTT tokens in that, if you're of that asset, then if the token value goes to zero, then you're basically left with $0. So you're basically left with $5 billion, right? The other five just goes to zero, right?
Yeah, and I definitely think they were banking on the brand that they have built, with all the sponsors that have happened and FTX being globally known and being number two. So I guess that's a fair assumption to make that their brand is so strong that they won't need to, that they can do something like this, like do a cheapskate ICO and create these FTT tokens and base it on that so-called intangible valuation, goodwill valuation that comes with the brand.
Yeah,
Right.
yeah, and the fact that had it not been, this was a leak that happened, right? This is not like someone disclosed. This came out with. This was never supposed to come out. This was never supposed to see the phase of the light, right? But then here we are, right? So they never predicted. They never ever predicted that this would happen. So on November 2nd, this came out, and and Twitter just erupted as soon as this happens. And I love Twitter for this, dude. Like seriously, like it is so sensitive to the signals that are out there in every single domain, not just like crypto or like all these scams and frauds, but also about, so there are a lot of these issues going on in Iran, if you're aware, like people are
Yeah.
there is a lot of inhuman activities that are going,
Protests going on and
so and they're so good to, like, there's a community for each of these, right? So this is actually really good. What's there on Twitter?
It definitely helped. It definitely helped Elon.
Yeah.
Okay, yeah, Elon's like, yeah, we have the most number of daily active users
Yeah.
ever, and like the whole crypto world is just crumbling over there.
Yeah.
And it's actually funny that SBF actually committed. He told Elon, is like, yeah, I'll give you $3 billion to invest in to buy Twitter. And Elon actually questioned. He's like, there was this Twitter account that shares leaked emails, internal emails. So yeah, and Elon like straight up asked like, does he even have $3 billion like cash to like give me? Like how does he even have it? Like it's crazy.
FTT for the win.
FTT for the win. Okay.
But yeah, so see, naturally, right, when you're gonna push out $3 billion worth of FTT tokens to someone, the price is gonna increase like crazy, like the because of the market movement that's happening of these individual coin transactions, right? But yeah, so this happened, and then Twitter erupted, and then CZ, who is the CEO of Binance, and who is also like who has history with FTX, came out on Twitter, and he said that he's going to dump all his FTT tokens because of this particular thing that the balance sheet has revealed, right? Now, when this happened, like it just erupted a wave of panic, right? Like someone as renowned as CZ is saying that this is a point of concern. So people just started panicking, and then they just started withdrawing whatever is there at FTX, right? They were just like, we don't trust this anymore. We want out, right? Now, SBF and FTX were just like, hey guys, we have all the funds to back this, right? We have all the money to support all of your withdrawals. Don't worry. We got this. This is totally under control, right? And he also went on to say that there are no solvency issues whatsoever with any of these companies, right? His first initial stance was, we are totally safe. There is nothing that can go wrong with us, right? And here's one thing that I want to talk about, and why this does. So a very simple, a high level understanding of what this issue is basically, let us say I am a stock exchange, right? So, and let us say, Yash, you come to me and then you're like, hey Vatsa, take this 100 rupees and then do my tradings for me. So I will take your 100 rupees, and then you will say that, okay, put 50 rupees in ICICI and put 50 rupees in HDFC. So that is what I'm going to do. Yeah. I'm going to take that 100 and put it 50-50 there, right? And then your value is going to grow, it's going to reduce, like a lot of things can happen based on how market is performing. But then you always have the right to come back to me and tell me that, Vatsa, give me back whatever I have made. So let us say 1 year later, your 100 rupees is now 150 rupees. You'll be like, Vatsa, give me the 150 rupees because I want to cash out, right? I should be in a position to give you that 150 rupees, right? I should have enough reserves in my company's balance sheet to be able to satisfy that requirement, right? So there are very, very stringent regulations for the conventional stock markets and stock exchanges, right? So every single company needs to have a 1:1 asset to the man, I'm not getting the term, whatever that's called. Like, do you know what it's called?
Yeah. No, I don't know what it's called, but I know what you mean. So for each, so I can explain it. So regulation, so say you invest 1 Bitcoin, you need to have an equal amount of Bitcoin in the bank to pay this person back, because these are such volatile, tokens and assets. Okay, you can't just have one reserve saying that, the total market cap cost for like this, so we own 10,000 Bitcoin, that's all. Okay, we don't own any other currency. But like if Bitcoin tanks, the entire fund tanks. To stop this, they have the 1:1 ratio. So you hold 1 Bitcoin and the exchange also has 1 Bitcoin. So this is how the traditional exchanges work. Okay, and if you're a bank, okay, the rules will allow you to use part of that and use it to lend and invest money. But exchanges do not have the right to do that. And Coinbase is actually very clear on this. So Coinbase works on this 1:1 ratio. So yeah.
Yeah, exactly right. So basically, in a nutshell, like the conventional stock markets will have to have like so if you have invested 100 rupees in my stock exchange, then my stock exchange should have 100 rupees to back that up in the reserves, right? So that is exactly what 1:1 means. Now this is very stringent, like I said, for stock market, but crypto exchanges and cryptocurrencies is like Wild West, right? So nobody really knows like what's going on. So there are basically no regulations around it. There are no laws, and there are no guidelines on like how certain practices have to be followed. As of right now, it's entirely based on ethical decisions that the founders and the big whales in the crypto market get to make, right?
Right, and just to point out, the law and the regulators are actually way behind. Okay, like people are in US are still confused because the SEC, the DOJ, or whoever these people are, the regulators, they still haven't even defined whether crypto is a commodity or a security. It's still under like some sort of confusion, and even accounting practices. There are no like standard accounting practices. So it's a mess, man, and they need someone to clean this up.
Yeah.
Okay, so yeah, go ahead.
Yeah. So that's why it's important to really have reserves if you're a stock exchange, right? Now in the case of FTX, what happened was that after CZ announced that he's going to dump all of his tokens, uh, and given that more than half of the assets of FTX are FTT tokens, the price of FTT tokens is obviously going to plummet. And given that more and more people are selling because of this public tweet that CZ put up, it's just going to do more damage, right, to the whole situation. So here is when things started getting ugly for SBF, right? Because he was
Yeah.
basically telling that, hey, things are fine, everything's okay, and he was in fact telling people that he will pay everybody back. He's like, whoever wants to withdraw, I am going to give your money back for sure, right?
Yeah. Just to add on, like over there, yeah, it started with the tweet of CZ, right? But CZ actually figured it out. Okay. So according to what I have read, and this is my understanding, Almeida Research, the moneymaker, this thing, they hold 41% of Almeida's this thing is in FTT. Okay, their own this thing. So what? And this is where the fraud happened. This is where SBF became what's his what was the thing? Sam Bankman fraud. Okay, this is where the fraud started. SBF committed to a lot to get some people out of trouble. So what's this company, man? BlockFi. So he committed $250 million credit line to BlockFi, okay, to bail them out basically. And then there's this thing called Voyager. Almeida committed $500 million to bail them out. SBF gave $5 million to Biden right before he got elected, okay. And I think this year again he gave some around $38 million, and he has committed $1 billion to the Democratic Party. People should be wondering where the hell is he getting this money from, right? So what? And everyone just assumed that Almeida Research and FTX is making a shit ton of money because they're, and we'll come to this later, that their books showed that they're making a revenue of $1 billion, etc. Whatever, either it's been cooked or whatever. On the book it showed they are getting a huge cash surge in. So Almeida was actually in trouble. Almeida Research was actually in trouble. So since Almeida owned a lot of FTT tokens, they took this FTT tokens and held it as collateral. That's the word. With FTX. So FTX, and this is where the biggest fraud happened. Okay, FTX is like, yeah, sure, cool, we'll give you the thing. But FTX did not have $6 billion to give them as a credit line, like cash. They took the customer's money, and that's when shit hit the fan. Okay, they didn't have enough to pay people back, and because they're literally taking the customer's money, and it's very very clear this you cannot use customers' money that they have put in the bank unless you're in their balance as operation cost to run your company. And this is a very very clear statement. Unless you're a bank. Okay, only banks are allowed to do that, and only they're allowed to use certain amount. There are many rules to it as well, and that's where the fraud happened. Then CZ found out about this, and he used a term right in his tweet.
Mishandling of funds, misappropriation of funds, I think.
No. Recent revelations.
Okay.
He said, due to recent revelations, I'm going to liquidate my entire $2 billion worth of FTT tokens. And that started the spiral.
Yeah.
So, yeah.
Yeah. So
Yeah.
so basically it caused a lot of panic as soon as CZ put out this tweet, and then the value tanked. Like if you really look at the chart of FTT token, you'll just see that overnight this happened, right? The plummeting happened. Now, once this, now obviously the asset sizes, the asset value of FTX would have shrinked considerably because of this, and the liabilities has just remained same, if not have increased, right? So now this calls in a lot of questions. Now this is like, okay, investors want to withdraw money, you have liabilities, like there are institutional investors who are involved in this. Like, have you seen, Kevin O'Leary from Shark Tank is an investor in FTX, right? Have you seen his take on what this whole drama, like what he thinks about this whole drama?
No. I
Yeah,
don't.
you should just watch. It's a very nice 2-minute clip that CNBC covered. It's recent, like a couple of days ago it came out. So in that he basically just agrees. He's just like, yeah, this is a mistake. Like this should have never happened. And you know what he says? He goes on to say that institutional investors will not invest even a single dollar into cryptocurrency unless there are regulations around it, unless there are guidelines and guardrails to prevent instances like this and like variants of this from ever happening again. But okay, so a lot of people, so they were withdrawing, and then like it all hit the peak. Like people definitely knew things are wrong when they stopped withdrawals. Okay, FTX basically canned withdrawals. The whole withdraw button was taken away, which is exactly like what happened with Robinhood. Even the whole Robinhood saga in GameStop, this is exactly what had happened. And simply because these guys are centralized exchanges, these are centralized companies, right? So they have all the authority and power to do all kinds of things, and they just like no more withdrawals. Now this started raising a lot of questions. Okay, they were like,
Fun fact.
Yeah.
Sorry, before we
Yeah.
move, Sam owns 9% of Robinhood.
yeah, I know.
So not that
Yeah.
far. Not that the apple doesn't fall that far from the tree.
Yeah, it's exactly
Yeah,
what it
let's
is,
go.
right? And in fact, the CTO of I don't know if it was CTO or if it was the risk management officer of Alameda and FTX. This guy was also involved in a very similar scam back in 2010. There was a poker website
Right.
wherein people would play poker, and then this guy would just look at the hands that were dealt to people, and then he would allow people from within the company to participate on the table and beat the actual real players. So there was a cheat that this guy was running back then. So like it's all these kind of people who somehow Sam found, and then like he just started this FTX.
Yeah, he was the lawyer for Ultimate Bet, and they like stole millions of dollars. 10 years later, head of compliance of FTX.
Yeah.
Beautiful. Love how that worked out. Crazy.
Yeah. So yeah, this so basically they stopped withdrawals, and then like a lot of
Yeah.
questions were being asked. They're like, okay, now we really have to know what's going on, right? You can't just do this. And that is when they're like, yeah, we are facing certain problems, and they called this a liquidity problem. So there are two kinds of problems that usually companies face. I just want to digress a little bit here. The first kind of problems that they face is the liquidity crunch or a liquidity issue. Now, what this means is that as a company, you'll have a lot of assets, various kinds of assets, right? Like a very simple example is gold, for example. Now, gold is something that you have in your locker, okay? You have like, let's say $100,000 worth of gold sitting in your locker, but then that is not real cash, right? Like you need to be able to find a buyer at the price that you want to be able to convert that volume of gold to $100,000. If there is someone who buys it for lesser, then it's not worth 100,000. And if someone buys it for more, then it's more than 100. It's not 100,000 at all, right? So the point is that till the time you have an asset, but then you don't have a buyer, you don't have the right buyer, right? So that is where you have a liquidity problem, as in you have the cash, you have the assets, but then you're not able to convert that into liquid cash. The second type of problem, which is a bigger problem that the companies face, is called insolvency issues. Now, what insolvency means is that you you have an asset that is basically valueless. Okay, that is basically there are no buyers simply because the value of that asset has depreciated so much. So you're not even able to convert. You have something, but that's worth nothing, right? So that is,
You can't
yeah,
sell
you
it.
can't sell it. So that is when you run into solvency issues. And when a company runs into solvency issues, they end up going bankrupt. All their assets have been cashed out, and then there is nothing else to do. They just have to file for bankruptcy, right? So these guys started facing severe liquidity crunch, is what SPF said, right, in the start. And they're like, yeah, we will find a buyer, we'll sort things out. And which is when CZ came in to the picture again and is like, guys, Binance will buy FTX from you people. He put out this tweet, and then it calmed some people down. Like some sentiments were soothed, and they're like, okay, things might start looking promising again. People thought, but then he signed this thing. So it was a non-binding agreement basically. So they were not obliged to go through with it. They were like, we will do the due diligence, and then like based on top of whatever comes out, we will go ahead with the decision. Right. So I think on November 4th is when CZ said that, okay guys, we are planning to buy the company. And then on November 5th, which is one day later, he came back and he said that the state, what I've seen cannot be unseen. I have seen like some horrible things, and there is no way in which we can go ahead with this deal, because the kind of liabilities that FTX has is something that is insurmountable, right? And that kind of damage cannot be taken by Binance. Now here I have here's my take on this. Okay, I think Binance knew all along the way what it was doing. Like it knew that they're going to become the talk. They just found a way to become the talk of the town. This is nothing to do with Binance, but then every FTX report that you ever see has some element of Binance involved in it. And whether they talk about whether they talk about anything else or not, one thing they will talk about for sure is that Binance wanted to buy FTX, and then Binance withdrew from the deal, right? So it's very hard to think that this was a genuine, from the heart move that was made. This was definitely, there's some element of marketing agenda that was some clever marketing person would have come up with.
Something is gone in the background that we are not seeing completely.
Yeah.
Okay, someone gained a lot from this, and like the clear winner is Binance. Like, ain't no one touching them right now. I think Coinbase is doing pretty well as well.
Yeah.
Okay, so you want to talk conspiracies, huh? Okay.
So
thought
this is just my speculation, yeah. Like I'd like to use the word speculation because they have just gained so much more popularity after this. They have like they have just gained a lot just by saying that we will invest and we will purchase and then backing away from the deal.
Okay, so I just want to add. Okay, let me give you my speculation. Okay, CZ knew all along. Okay, but or maybe he did not. He did not. Someone had to tip him off as to what's going on. Like why. And there's one person, I think King Elon was behind this.
Seriously.
Okay, yeah. He's like, when like SBF wanted to invest in Twitter, right? Like, he reached out and maybe Elon was like, how the hell does this guy have, does he actually have $3 billion? Okay, but he rejected it. He rejected the offer thinking that something is fishy. Okay, so maybe Elon being Elon, he would have reached out, okay, and been like, maybe something's fishy with, SBF, like, what is this? Like, how does he have $3 billion to invest? And I think Binance invested in Twitter as well. Okay, so Binance invested in Twitter, and they're like, oh fuck, this kid has 3 billion plus, like, he's giving $1 billion away to here, he's giving money here, he's throwing money here and here. Okay, so I think that's what gave it away, and maybe Elon would have given the hint to CZ, and then CZ would have investigated, and then unveiled this entire thing as like, oh, okay, this is not right, and yeah, so I think that's my theory.
Yeah,
What do you
that's
think?
a hot take. That kind of brings a lot of people down at the same time. If this is actually what's going on, Him-
And a lot of people up, and a lot of people
Yeah.
up. So another thing, so CZ and FTX, SB's, bro, there's too many code words here. Okay, there's too many code words. Okay, CZ and SBF were, once that sell-off happened, they had kind of like this battle going on between number one and two. Healthy competition, you would think? No. Okay. SBF actually was playing dirty, like he was taking shots at Binance. So here's the thing, I think there's a lot of politics as well involved. Okay, I'm not well versed with this, but this is my gut telling me. SBF invested 5 mil Democratic. He has quoted so much. He's quoted $1 billion that he'll give to the Democratic Party. He was working with legislators and he was trying to push a bill that was supposed to come out very, very soon as well. And now that bill is put into pause. Okay. Then one of the days, CZ was in Washington trying to talk with legislators and everything. And Sam took a shot on Twitter like, "Oh, it's really cool to see a friendly face in Washington, representing the crypto community." But is he really allowed to do that? Like taking a shot that he's not an American. Why should he be there? Okay, why should he be in the why should he have a say with the regulations and all that kind of thing? So I think there were like different approaches. So
the tussle
you
was
can,
there.
you can see that, yeah, there's a tussle or something like that. And man, when this was uncovering on Twitter, the entire thing, it felt like an episode from Billions or something like that.
Yeah.
So, and especially when hedge funds are involved, especially when there's so much money involved and so many big players involved.
Yeah.
Okay, so CZ got hinted. He took it. He found the one thing that can destroy his next best competition. Done and dusted.
He
That's it. So
Yeah, that was a good move if that's what he did. Uh, you have to stamp your competition when they have fallen, kind of thing. If that,
yeah.
it was good what he did. But yeah,
And yeah, I mean, okay, so CZ obviously was scared, like, because taking down your number two competitor like that could mean like the end of crypto. Like, obviously the fear factor now in crypto is very, very high. Like, everyone's like, oh, I don't want to touch crypto. Like you said, many investors don't want to invest in companies anymore if there's no regulation. So little more there's a lot of fear in the market. So which is why maybe that move came where Binance is like, yeah, sure, we'll buy him. Okay, to show that like Binance is the trustworthy one, Binance is the whale, Binance is the regulated. Okay, I don't know what Coinbase was doing publicly, unfortunately, because they're also massive. But so I think there's a lot of faith in these two centralized right now. So I think Coinbase and Binance are really, really killing it.
yeah, and the thing is that after this whole thing happened, right? CZ was the one who was telling that, guys, let's show proof of reserves. Let us be more transparent. And he's coming out like this white knight, and then he's just like making the most of this entire situation that's gonna just propel him to and Binance to another level. Like if Binance gets through this, and then if they will 100% come out stronger, and they will be way more trustworthy than any. So WazirX went down. There was a scam that happened in WazirX as well. They were siphoning funds. FTX went down, right? So a lot of these big players are going down, but Binance is the only is an exchange that has
Only one that stayed
yeah,
strong throughout.
yeah. So you see, like
Yeah.
this gotta be one of those blue chip exchanges, right? And BNB token is gonna have like a lot of value if it gets out of this safely.
Yeah. Yeah. And dude, I mean, I'm sure that Binance would have also like cut cut a few corners back in the day, okay, because it's been around for quite a while. It was at a time where crypto was actually frowned upon, and nobody even like knew what crypto was. The government certainly did not, but it is an Asian origin. I think it's from China, right? Binance. Okay, and definitely like Caesar would have had to like cut some corners because China doesn't, as you can say, it's a little more conservative than and when you look at America, America also took a long time to adopt crypto and crypto exchanges and creating regulations. So I mean, it's all fair game. Like if you get caught, you get caught, I suppose. Yeah, so basically, I'm just trying to say that the world was way more tougher when Binance had to create their exchange. They had to literally, they were like one of the first to market, and as you know, one of the biggest rules in startup is be second first. There's a reason for that because like someone has already fought the war. All you have to do is just ride the train, and that's exactly what FTX did. That's exactly what some of these other crypto exchanges have done. But Binance were the one that really, really had to fight it. So, I mean, if they have come out on top, CZ is a very, very good businessman. Very, very good businessman. And hats off to him because, like, he had to go against China. He had to go against the world. And, like, it's a powerful behemoth. And one other thing, Binance is the major liquidity provider for many of these other crypto exchanges like CoinDCX and WazirX. I think even 100% of WazirX, if I'm not wrong, the entire liquidity is provided by Binance. So they pretty much run this entire crypto thing. Just to do a small quick tangent. So I just saw this tweet and I think it's very relevant. So there are centralized exchanges, there are decentralized exchanges. So there's a new one that's out, and it just like this was just tweeted like literally while we were just going to start talking. So I don't know much about it, but I just want to mention that there are people already in the works, and they're using this opportunity to, it wasn't all for like harm. Okay, sure, a lot of people may have lost a lot of money, but I guess that's why the decentralization is required with some sort of regulation. So I don't know how that's going to work. Okay, the security plus the transparency, maybe like more smart contracts into works where everyone can see the everything that goes on. I really don't know, but this DEX, it's called decentralized exchange. It's called. We're excited to announce Phoenix. Okay, first limit order book DEX that is fully on chain, non-custodial, and crankless. Okay, there's a lot of jargons over there. We'll probably deep dive and explain a bit more as we go. But their main USP is on Phoenix, traders will get a fairer price and tighter spread compared to AMMs. Hell, I don't even know what it is, but I think this crankless is a big word in the Solana blockchain. So yeah.
Okay. So yeah, basically CZ wanted to buy at first on November 4th, and then he backed out, telling that okay, I don't want to buy anything because there is too much damage. There are a lot of knots that have to unwind. So we are out. Now the moment this happened, shit's just started. Like everything went crazy. Okay. People were like, okay, what's next, right? SBF was like, we're going to find financiers, we're going to find people to keep this boat afloat. He kept telling this, he kept giving false hope to people all the time.
He was lying. Yeah. He was pretty much just lying throughout.
That's just not okay, dude. Like I mean, if you're fucked up, you're fucked up. You've got to like, you got to own it up, and then like, be mature about it. But then what he was doing was literally toying around with people's money, people's savings, people's hard earned. Like they would have had so much of hope that is just like on their portfolios, and it's just gone. So yeah, this happened, and then he was just like, okay, we're going to find someone, we're going to find some kind of a billionaire to like help us out of this mess that we are in, or some company. to help us out of this mess. And then
Right.
this, I think, was November 8th is when they filed for bankruptcy. November 8th is when FTX US, and Alameda Research, all the three organizations just filed for, it's called Chapter 11. We were like searching for that
Yeah.
word yesterday. But yeah.
Yeah.
They filed for bankruptcy, and then apparently SBF is now under supervision in Bahamas, and he's just you know people just
Yeah.
want him to come back so that they can ask him questions, to say the least.
Yeah. So he filed this Chapter 11 in the US. Okay, and I was watching an interview this morning with the CEO of Coinbase, Brian Armstrong, and he found that odd. He's like, why would he do just the US, or why would he just do the US? So something fishy went down there.
Yeah.
Okay, uh, about him being held in Bahamas, we don't know for sure because one, I like to mention that FTX got hacked.
Oh, yeah.
Okay, right when all this is going down,
Yeah.
with almost $600 million that's just disappeared, wiped out. And I think some are saying now up to $1 billion. But I think 600 million is something which is like concrete right now. And if you have the FTX app or anything, just delete it from your phone because apparently they have the virus that can, that's like, I don't know, hacking into your phone and those kind of things. And just on the night when the hack was happening, there's a plane. People are tracking all the planes that are flying into Bahamas and flying out, and then they track this plane that's flying to Argentina. So, and everyone's like, "Oh, Samuel is on the run. He's going to Argentina." Some are claiming he's going to Dubai. Some are claiming he's going to Argentina. We don't know where he is.
Yeah.
Okay, but this money has disappeared, and they were like, "Oh, it's a hack.
Yeah.
It's a hack." And yeah, it's just the timing of it all is like absolutely crazy because the hackers had access to everything.
Yeah.
You know, wallets, apps, website.
Yeah. And people could not withdraw. So this has never happened in the history of that application, right? Like hackers getting this perfect time. So, so yeah, it's just very convenient. Whatever is going on right now for SPF, but I think honestly he should own it up. As like you said, like till the point that he did not siphon out the funds from FTX to Alameda, it was okay. It was a genuine mistake that was done, right? But then the moment he did this, that's when he crossed the ethical line and he was just, he just committed a fraud, right? Like for the lack of a better word.
Yeah.
And
And not just that. Okay, so there's another report that's come out that Sam actually had a backdoor on his bookkeeping system. So basically, on the books, he kind of like cooked the books and just said, yeah, everything's fine. Look at the ledger. Look at my books. It's all good. The money is all there. But then everything was like, actually, it wasn't. It wasn't there. Another thing that I like to mention, and like it's slowly coming out that like he was on these drugs. I don't know what drugs he was on, but he was using stimulants to wake up. He was using sleeping pills, and he was enforcing his employees to use these supplements, these extra supplements. So I don't know, man. I just feel, like I mentioned, he was brought up with this utilitarianism.
You
That's
got
the
the
word.
word.
Utilitarianism. I have to break it down. Okay, utilitarianism. Utilitarianism. Okay, he was brought up with this that you gotta take action to give happiness and like so his plan was I'll get rich and I will give that money away. So he was so driven behind this whole thing that there's a little bit of narcissism involved, and they say that drug addicts, they say the smarter you are, the more prone you are to getting addicted to a drug, right? And I mean, SBF, he went to MIT. You can tell, like, he's a high IQ individual. He's achieved so much. He became a billionaire in 4 years. He's done all these things. Somewhere along the line, these things, you start thinking you're God. You start thinking you're the shit. No matter what you do, is that. So talking about that. So here's something. Okay, I'll put it up on the screen, but I'll just read it out to you. And this is a Sequoia document that Sequoia posted on their website. Okay, this is when they were raising some. I don't know whether this was around the meme fund. Okay, but he was basically raising funds, and he was in a Zoom call with Sequoia. Right. So this is what he said. Okay, like he gave this enormous pitch, like, people in Sequoia loved him so much that they had to post this entire thing. Okay, and it's super cool. SBF told Sequoia about the so-called super app. I want FTX to be a place where you can do anything you want to do with your next dollar. You can buy Bitcoin, you can send money in whatever currency to any friend anywhere in the world. You can buy a banana. Okay, he said this to Sequoia. Okay, you can do anything you want with your money from inside FTX. Okay, and the chat window in Sequoia on the Zoom chat just went crazy. Like, I love this founder. One of the partners typed, he's a 10 out of 10. Someone's like, yeah, this is the shit. Like, Okay, so this is what the document says. What Sequoia was reacting to was the scale of SBF's vision. It wasn't a story about how we might use fintech in the future, or crypto, or new kind of bank. It was a vision about the future of money itself. Okay, with a total addressable market, the TAM, being every single person on the planet. Okay, and all great things was being told about him, and like some 10 feet away there was someone that's sitting near him, is like, oh shit, this is really cool, like, let me go in his screen. And turns out he was playing League of Legends while doing this entire meeting. Like, he was playing a game. and Sequoia was so proud of him, they posted this entire thing as well. Yeah. So I was just like, okay, is that what you do when you are raising money? Like, you play a game of League of Legends while trying to raise $285 million? I mean, that was a red flag, but like, nobody saw it. Nobody wanted to believe it. Yeah. Okay, so I feel the investors are at some sort of a disadvantage over here. Like, they had some part in feeding this guy. Yeah. Okay, there could have been hints all throughout, and they just ignored those hints. They're like, no, this vision is so good that we'll just trust everything that you do. It's happened before. It's happened with, like, many of the scams that has happened. It's happened with Nikola, right? It's happened with Nikola. So we spoke about Nikola Motors last episode. Go check it out. Okay, but the same thing happened. He sold a story. Okay, there were a bunch of red flags, no product raised. It all failed towards the end. So maybe SBF himself was showing some qualities, but nobody cared because the vision was so good.
Yeah.
So
you just need to be a good storyteller,
I don't know
to be a billionaire.
Yeah. Yeah, absolutely, man. Absolutely. Why do you think I'm in this podcast? We're going to learn storytelling and we're going to be billionaires.
Yeah, and we're going to find the middle name of Nikola Tesla.
Yeah.
Right? And name the...
He doesn't have it. I looked it over.
Okay. So, dude, I want to...
Not there. I Googled it.
Okay.
Yeah.
Okay. So, is there some lag that you can hear? Or is this okay?
I think there's a bit of a lag between how we are speaking, but it's fine.
Dude, so I want to talk about what's next, right? In terms of, how is this where are we going to go from here, right? How do things look in the future? And I want to, like, tell a couple of things, and you can also add to whatever I'm saying. One of the things that I really want to kind of emphasize on, and is that this is no way defaming cryptocurrency or the concept of blockchain. Honestly, like I've read so many articles and I've heard so many people just saying that, hey, cryptocurrency is always a scam. We always knew it, yada yada. This is not what is going on. This is not nothing to do with blockchain or cryptocurrency, right? I kept throughout this entire episode, I kept telling that FTX is like Zerodha, right? So it is like any other company that's out there. It's a centralized exchange that deals with cryptocurrency, right? So I am still very bullish. Personally, I'm very bullish on blockchain, and I believe in what this technology can revolutionize and what it can bring to the table. So I just want to call it out, and I want people to be more informed about things before they come to conclusions, or before they just like, hey, I'm just never going to trust blockchain or cryptocurrencies ever again. Don't do that, because there are so many valuable cryptocurrencies like blockchain, like Bitcoin. Bitcoin is one such fantastic example of a perfect cryptocurrency, and that's why so many people adore it, right? So many people are bullish about Bitcoin. So these are two separate things. FTX and blockchain and cryptocurrency basically are two separate things. One is a totally centralized entity, and the other one is all about decentralization. Do not mix these two things. Yes, what happened had an effect on these cryptocurrencies and like this new technology that was on blockchain, but it has nothing to do with the whole idea of blockchain itself. Right, Yash? Would you agree with me on that?
Partially,
Okay.
partially. Okay. I don't think like Bitcoin is the perfect cryptocurrency, but yeah, I know what you mean by that statement. I understand what you mean by that statement. Yeah, blockchain bullish. Okay, why? Just the first of all, the you mentioned in one of the previous podcasts about the voting system, how the voting system cannot be regulated. I mean, can be like very open, decentralized, and everyone can vote. There will be no corruption. There will be anything. Brilliant idea. What a great use case about it. I'm sure India should be implementing this in a couple years, if I'm not wrong. But I mean, it would really solve. Like, I don't know if a lot of people are tracking this, but I was having a friendly conversation with a friend, and he was telling me that in US right now, some states you don't even need an ID to vote. Like, and because of Biden, there are a lot of people that are just illegal immigrants that are entering America, and they're giving the thing that getting the message that, oh, Biden is allowing this, so vote for him. So since there's no ID, you don't need an ID to vote. These illegal immigrants are just entering and voting.
Yeah.
So it's rigged. It's pretty much rigged. So there is definitely a massive use case in terms of credibility. Like, it'll only get more stricter. It'll only get
Yeah.
better now. Okay, this is where everyone's gonna put their heads together.
Yeah.
Okay, I don't think socialism is the way out. I'm not a complete, oh, everything must be, all wealth should be. No. I don't know how we will survive as. I don't think we are those kind of beings. Okay, there is a hierarchy. There is a hierarchy in the jungle. The lion is the king. Everyone knows it. And I'm a true believer of that.
Yeah.
Okay, and no nepotism though. Like some other, if there's some other better species out there who can take down the lion, take down the lion. Simple. Okay. I believe in the circle of life. Okay, so yeah, I don't know. Did I go too far? Let's bring it
No, I
back.
think
Okay, yeah.
the baseline is bullish on blockchain, and this should not really affect
Bullish on the technology. Bullish
on
on
the technology and what it can offer.
Sorry.
No, that's absolutely right. And it's like even all this while, right? If you listen to how Vitalik talk, like about Vitalik's stance on these things, and if you listen to there is one more guy called as Nadir. Nadir is the founder of DSO blockchain. Okay, so all of these guys, they always emphasize on storing your cryptocurrencies in cold wallets, right? The problem arises when you put it in these so there are two kinds of wallets that are there: a hot wallet and a cold wallet. A hot wallet is something that is linked to the internet, right? Like how you have on Binance or on FTX or on any of these other platforms that is connected to the internet. Such wallets are called as hot wallets. Now, the moment you store something in a hot wallet, like what happened with FTX, you will face issues like you won't be able to withdraw, or like your funds might get stolen if something gets hacked, right? So there are a lot of issues that come inherently with hot wallets, which is why the people who have built blockchains, who are the legends in the blockchain or the gods in the blockchain technology, they always insist and they personally use cold wallets, right? So if y'all have cryptocurrencies and if you guys are not feeling safe about where to hold it, think about purchasing a cold wallet. You'll get it on Amazon or any of these like regular retail platforms. Just get one and it's always there with you, right? You can trade whenever you want and like boom. So yeah, that's one takeaway. The other thing that I just wanted to mention is that I just feel like inherently retail investors and institutional investors will be more cautious and will be more vigilant going forward. And like you said, good things will come out of this whole episode. So yeah, it's sooner now than later. Now only like I think about 5 million people daily transact on the entire of blockchain technology on blockchain, right? So there is still a good number of people, almost 99.9% of the people don't even use it. So it's great that it has happened right now, and we can learn a lot, and maybe we can build on top of it, right? So yeah,
Yeah, absolutely.
what do you
man.
think?
Absolutely. Look, it's a hurdle. First of all, we are in a bear market. Okay, the entire like crypto industry is like, oh, we were just about to go out of the bear market, but no, we are all slammed back in terms of that. We will rebuild. Okay, it'll take some time.
Yeah.
Okay, but not before there will be more damage. I feel. Okay, this is my personal opinion. Uh, there were a lot of people that invested their money in FTX, man.
Yeah.
A lot. BlockFi had money in it. A few other companies had money in it. Okay. Now I heard crypto.com could be the next
Yeah.
exchange that is in trouble. So not so sure about the next couple months, but it's all about the bounce back.
Yeah.
And if there's one thing we know, like some of these people are relentless that are working, and they'll bounce back.
Yeah.
So I would just sit and observe for now, and just be on Twitter and look and like try and understand what blockchain is, what people are trying to do to solve this. Okay, and if you can think of other ideas over there. Okay, and I think India will be the next leader in the Web3 space, because man, we like Solana was like definitely like one of them. We have a lot of startups coming up around this, coming up with solutions in India, and we're getting the support that we needed. We have the talent over here, and we like it's very important to pay attention to the market. So yeah,
Yeah.
that's my take.
Yeah, I agree with that. So yeah, I guess that's what it is.
Cool. Is there anything else?
No, I think we've pretty much covered all bases. We have kind of tried our best
Yep.
to explain what we understand about this scenario, about the situation, and then we've tried
Till this point.
yeah till this point. That's the biggest caveat of this whole thing.
Who knows what's gonna come?
Yeah.
Yeah.
No, I think it was fun. Like I personally enjoyed following the story so much because every day I wake up, something new is happening. Every single day, like I sleep, learn knowing something, and then okay, CZ is going to buy FTX. Next day morning I wake up, no, that deal is not going to happen. And then I read SBF telling that yeah, guys, we are fully sorted. There is no problem. Next day they file for Chapter 11.
Yeah.
And I'm just like, what the heck is going on? But yeah, it was fun
man.
just following the story too, genuinely.
Yeah, and there's this beautiful tweet I'm just reading right now. It's like update since the FTX collapse. Bitcoin still working, Ethereum still working, DeFi still working, Lens protocol still working. Okay, fundamentals haven't even flinched.
Yeah.
Wow, powerful. That's beautiful.
Yeah.
So yeah, it's actually the technology. It's technology is working. Everything is there. We should just find a way to completely automate this system. Okay, there's a little bit of human. I think yeah, it's basically a human error
Yeah.
that caused this entire thing. Human error.
All
Human
the more why
characteristics in
we
our
need to have
system
smart contracts.
and over smart.
Yeah, if there were smart contracts in place, then this would have never happened, right? Like one person could have never siphoned out the funds. If there was a multi-sig wallet that these guys maintain,
Right.
then like this can never ever happen because it has to be recorded on the blockchain, right? So so yeah, the technology is
Yeah.
very concrete, very powerful, totally.
No. Yeah, yeah, and there's this company called Mansari. Just to put it out there, like it's a company that I'm kind of like working with. They build accounting solutions for Web3. So maybe if they use some outside company like Mansari, maybe this wouldn't have happened. He wouldn't have been able to cook the books, because everything else is in like one separate database that these people cannot have access to, and it's more safer. And it has all this, like you mentioned, the multi-sig um, accounts and everything integrated with in their platform. So it's actually pretty cool. They're just launching, so check them out.
I like what you did there.
I know.
Okay.
Yeah.
I think we're good.
Fine.